Hi, my name is Mr Azmi Muslimin. I'm a private investor. I invest in various asset classes such as equities, REITs, and real estate. I started investing when I was an economics undergraduate. I began my career as an economics lecturer in a junior college. I then did my MBA at NUS Business School. After that, I worked at investment company Temasek for about 10 years before becoming a full-time private investor. An investor invests his capital with the expectation of financial gains. He invests for income or capital appreciation or a combination of both. Before investing, he will need to do due diligence and valuation to determine the risk and returns potential of an investment. He can invest in various assets such as equities, REITs, real estate, commodities, fixed income securities, exchange traded funds, and mutual funds. These assets have different risks and returns profile. For instance, government bonds are low risk, but they give low returns, whereas equities could potentially give higher returns, but they are more risky. Hence, portfolio diversification is important. An investor should build his portfolio with an optimal asset allocation based on his investment objectives, risk tolerance, and investment time horizon. He should review his portfolio at regular intervals and rebalance it if necessary. An investor needs to monitor political and social developments as well as monetary and fiscal policies, both locally and globally, to evaluate how these developments may affect his investments. The US-China trade war, the COVID-19 outbreak, the global central banks, monetary stimulus, and government fiscal actions are examples of major factors that can move markets. Typically, I would advise building a balanced, diversified, and resilient long-term portfolio. The portfolio must first consist of sufficient low-risk assets such as cash and term deposits to ensure sufficient liquidity for daily operations and for emergency needs. The rest of the portfolio can then consist of a mix of various assets of different risks and returns profile. The portfolio should be able to generate income and has the potential to appreciate in value over the long term. To become an investor at a personal level, he must first learn how to invest by reading investment books, investment online resources, and attend investment seminars. If he is investing for his retirement, he should first determine his retirement needs based on his desired retirement lifestyle. He can first look at his CPF funds. He can invest in various assets. He should build a diversified portfolio based on his risk tolerance and investment time horizon. He could also choose to leave a portion of his CPF funds uninvested to enjoy the risk-free returns of the CPF accounts. Eventually, he can choose the best CPF life annuity option that meets his retirement needs. Besides investing in his CPF funds, he can also invest his cash savings after setting aside sufficient emergency funds. To invest in the stock of a company, he must first understand the business performance, the financial track record, corporate governance, intrinsic valuation, and the long-term prospect of the industry. He can read the company's annual reports and broker reports. He must be aware of the possibility that the company's stock price may fall due to reasons such as negative company specific news, a bad economy, economic crisis, industry disruption, and changes in policies. If he is investing in an investment property, he needs to understand the attributes of the property. A good investment property has a good location, which makes it easy for it to be rented out, and has a high net rental yield. The property must also have the potential to appreciate in value over the long term. In order to manage his risk, he should stress test his ability to service his mortgage in the event of rising interest rates, or if his property is empty for a few months. He must be aware of the possibility of property prices falling due to reasons such as economic crisis, market oversupply, property cooling measures, or rising interest rates. If he wants to be a professional investor working in banks or investment companies, getting the right educational qualifications is important. He can study business, finance, and economics at the undergraduate level, and then pursue a top-tier MBA degree or a CFA to better his chances of working in the investment industry. My last advice on investment is to invest for the long term. Markets move in cycles. Markets are driven by greed and fear. Market sentiment can go to extreme levels, both on the upside and the downside. Take advantage of market corrections and bear markets to accumulate high quality blue chip assets at bargain prices. From my personal experience, the best returns are from assets which I bought during economic crisis and bear markets. We can use dollar cost averaging strategy to build our portfolio for the long term. In life, you need to take calculated risks, be confident, make the move after you've done your due diligence.